Hello, guys. Good morning, and welcome to one more new webinar. So today we will be doing it on strike valuation setup. So last time we did on sentiment indicators, and many of the sentiment indicators that were showing some concerns. That has played out this week, and we have seen Nifty also correcting. So I thought that this might be the best time to do strike valuation setup. That is because in the long term, many of the people must be having those small mid cap stocks, which would have run a lot. And entry and exit is always a dilemma which people may have. So I think that in this case, strike valuation setup will help a lot for those people in order to maximize their gains through the entry and exit. So just to give you a context, strike valuation setup screen which we had made in strike, okay, that is actually a Techno-Funda approach, okay, wherein we combine technicals with valuation. Because in the past we have seen that any stock which would have value, okay, that may end up becoming a value trap as well if at all growth is not there. So when you combine momentum along with valuation, it helps you to it can help you to basically fine tune your timing as well in such value stocks. And today I'll present you some of the examples as well, where combining valuation and momentum actually helps. So I will quickly present my screen. So yeah, so strike valuation screen as of now, you can see anything with, I mean, within the stocks. So say you search a stock like say Coforge at the top, okay, and within charts there is the strike valuation setup that we have, okay. So I'll just brief you through what all features we have in the screen. Basically, there are the 6 7 valuation parameters which we have listed out, which is price to book, I mean PE, market cap to sales, price to book, EV to sales, EV to EBITDA, and earnings yield. Okay, this you can see it on different time frames. Okay, this is 1 year, 3 year, 5 year, 10 year max, and even if you want to do some custom date, you can do so. And you will notice that in every of the time frame, we have assigned uh, one time frame to that particular year. So say for example 1 year, we have assigned it with daily time frame. Now I'll come to the reason why we have done that, but just now just try and understand this concept, okay. So for 1 year, we have assigned daily chart to this. For 3 and 5 years, we have assigned weekly charts to. I mean, by weekly charts, what we mean is that the price action is weekly, and the momentum indicator that you see is weekly, and whatever valuation that you are getting is every week. Okay. For example, whatever is the Friday close, so Friday to Friday close are connected. Now when you do 10 year or max, okay, that's where you have, I mean, we have linked monthly time frame to it. Okay. Now why we have done this is because everyone must be knowing Bollinger Bands, right? So Bollinger Bands, what does it do? I mean, after calculating its average, which is the 20-day average, okay, we plot two standard deviation line on the upside and two standard deviation line on the downside, okay, to assess what could be the possible range, right? So something very similar that we are doing with the valuations as well. So think of this valuation line, green line at the bottom, okay, as the price action, okay. So what we are doing is that this middle blue line that you see, okay, that is nothing but if you double click over here, okay, you will see that that is nothing but that is average of whatever price action that you're seeing. The light red one, okay, is nothing but plus one standard deviation. So wait, let me write over here. So this is nothing but plus 1 HD. Okay, let me increase the font. Okay, what you see as a dark red line, that is nothing but plus 2 HD. Okay, the light green one that you see is minus 1 HD, and the dark green line that you see is minus 2 HD. Okay, so by 2 HD, what I mean is two standard deviation. Okay, now now the reason why we do this is because it is believed that whenever the prices hit two standard deviation up or two standard deviation down, okay, it is it I mean, it is basically said that the prices hover within this two standard deviation up and down band 95% of the time. Okay, so which means that whenever the prices get to an extreme, okay, either on the upside or on the downside, typically they won't sustain for a long time. Okay, and either the prices will mean revert, which means that the prices will go down, or if the prices are still rising higher, then it is the valuation that has to go down, so which means that the earning should come good. And that's when it makes sense to to basically see this valuation parameter. Now I will explain you in couple of minutes how and what we need to do, but just try and understand these basic points at the start. This will help you to understand this concept even better. Okay, so as I mentioned to you, see what we are doing over here is basically, this is the price action. Okay, the middle line that you see in Bollinger Band is nothing but 20-month moving average of basically all these candles, what we are showing. So we calculate so we calculate 20 month of these candle. Okay, and based on the average, okay, we calculate the two standard deviation of that on the upside and two standard deviation on the downside, that is for Bollinger Band. Okay, the similar thing that we are doing it in valuation. So this thing you can call it as valuation ka Bollinger Band, which means that even this might have a range, that is on the upside there will be plus 2 HD, on the downside there will be minus 2 HD. And this information can help you take some meaningful decisions, and I'll explain you how. Okay, so I hope that this I hope that this concept is very clear. So I'll give you an example how this work. Okay, say for example, uh, we know that market always moves from one extreme to the other extreme, right? So what we have to understand is that whether stock or the index or whatever it is, is it reaching an other extreme or no. Okay, it is when if the stock or the index is reaching the other extreme, okay, that's where we have to take an action. Okay, so many of the time what we say is that कि ये stock बहुत overvalued है, पता नहीं और कितना चलेगा, right? So वो that पता नहीं वो और कितना चलेगा is something that we can gauge it through this screen. Okay, and I will give you an example how. So say for example, capital good stocks have been on tear since 2020, and they have seen a massive run on the upside. So you can see that a stock like Cummins India. Uh, so yeah, one thing that is important for the users to note is that based on whatever industry they are in, okay, we have given some recommended parameters. Okay, it is not that you only have to evaluate through these recommended parameters, but this is for your guide. Like which of the valuation parameters can fit them well, in the current context. But apart from that, there will be other there will be these other other valuation parameter as well, which you all can see, okay, which is basically price to book, EV to sales, market cap to sales, earnings to yield, and so on. Okay, so now you can see that, so let me do the max chart. So here, what has happened is that in 2020, okay, basically in COVID. So wait, let me right now remove this Bollinger Band and averages. So what happened was that in 2020, Cummins India, fell almost from 1200 to, sort of 300 sort of levels, 280 levels. Okay. And what had happened was that on many of the valuation parameters, okay, it had gone to minus 2 hd. And in fact, in 2020, many of the stocks had gone to 2 hd, right? Minus 2 hd on the downside. That is because every stock were thrashed, and basically they were extremely cheap at that point of time. So now, see, what happens is that, as I mentioned to you, valuations can typically go from one extreme to the other extreme. Okay, this happens in the medium to long term. That is what we have seen almost every time. Okay, so you can see that in 2015 or so, Cummins India, the valuations had reached plus 2 hd mark. But from there, in next 5 years or so, the valuation fell down and it went to minus 2 hd mark. Okay, now from here it has again gone back and it has come to plus 2 hd mark. So now how to think about entry and exit is what we want to highlight it. Okay, now before that, it is extremely useful for, this screen is actually useful for short term traders, medium term positional investors or traders, or it is even important for long term investor. I'll explain you how. Okay, so for the short term traders, the time frame that you need to check is 1 year. Okay, for medium term people, okay, your time horizon should be 3 years or 5 years. Okay, and if you're a long term investor, okay, your time horizon should be 5 year, your time horizon should be 10 year or max. Okay, so in max, basically whatever data points we have, maybe in couple of months time, we will be putting the entire data as well. So I think we have it from 2005 or 6. So that is what we will put out. But at this point of time, in every case, you will see it from 2012. But in indices, there is a lot more data that we have. So yeah, so as I mentioned to you, for short term traders, 1 year is very good time frame to look at this. So this valuation parameters that we see, okay, that actually becomes a second validation point. Okay, and I will explain it to you how. Okay, so based on whatever time frame, whatever technical parameters that we use, that is fine. But the valuation setup which is there, that actually helps you to validate it further. Okay, whatever you're thinking, is that the same thing that is getting reflected in the valuation parameters as well? And if yes, then it can give you even more confidence that a turnaround can happen. And the turnaround that you're expecting, that can, you can be pretty sure about that, because valuations are also something that is that is something that is very supportive. So just like as I mentioned to you, Bollinger Bands, we work with Bollinger Bands. Valuation parameters is again extremely useful, because what happened is that, just like the prices, they mean revert, even the valuations sort of mean revert, right? So after an up move, there will be a pullback. And typically in price action, we cannot gauge the up move, right? because we feel that ये चलते ही जाएगा, but at the same time when the valuation parameters come to the plus 2 HD mark, it is more like, as I mentioned to you, okay, it is only 95% of the time the prices will remain within plus 2 HD band and minus 2 HD band. Okay, so अगर 2 plus 2 HD band के ऊपर जाता है prices, okay, so basically if the prices go above plus 2 HD mark, then you have to think that you are getting now into that 5% zone, where the prices needs to break plus 2 HD mark and sustain. So how, what are the odds that it will do that? The chances are very less, because this is something that is statistically proven, right? So that's where, the moment when the valuation comes to plus 2 HD mark or below 2 HD mark, that's where you have to be very alert, and you have to probably take some action as well. Okay, now, now as I told you, see, I will first, I will help you understand, okay, how it is useful in 1 year. Okay, because this same thing, the same logic, you have to apply it for 3 years, 5 years, 10 years, or max. Okay, the concept is the same, it is just the time horizon which is different. So say for example, if I want to find a stock, okay, जो मुझे short term के लिए I want to see whether it has a good setup or not. So say for example, this was one stock that had come to my radar, which is HCL Tech. So now, what I had done was, I saw its 1 year price to book. Okay, so when it was correcting over here, somewhere it had come to 1 HD. So of course, when you check the prior data as well, so this is, so these all values that we calculate it is based on the rolling 1 year. So when ये correction आया था, and prior to that when the up move had happened, okay, so this correction was actually, it had gone to a bit more below than minus 2 HD mark. Okay, so what had happened was that, as I mentioned to you, that whenever the prices come to above plus 2 HD mark or minus 2 HD mark, okay, that's where you can probably take some action. So now over here, what happened was that this was the first time when this minus 2 HD mark was hit on the valuation parameter. So this is, I am checking P of HCL technology. Okay, and based on whatever range it had that time, it had touched minus 2 HD mark. Okay, so now over here, for the trade setup, the people who have been following us, we have mentioned this n number of times, but I will repeat it if there are many, if there are any other new users that have joined, is that for trade setup, the two things, three things that we look out for. Okay, one is the Bollinger Band. Okay, one is 20 period average, and one is 40 period. So this is 20 period simple average, simple moving average. Okay, exponential moving average. Okay, so these are the three things that we typically follow. Okay, and based on these three things, what you have to do is that you have to position size yourself. Now please understand that whatever we discuss in this webinar, these are not a recommendation or something like that, but this is one of the methodology that we follow. It is not that you have to follow this method, but this works out very well for us, and we have found this helpful, while taking some position as well. So this is what we actually suggest doing, right? So now what we do is that we have to, so when we plot over here, okay, so the thing that we need to watch out for is that whenever the valuation parameters have gone to minus 2 HD mark, okay, then you have to come and you have to check the trade setup. Okay, what is happening? So now over here you can see that, this had come to the lower band and then it was bouncing back. So over here, everything boils down to position sizing. Okay. Jab ye I mean, when the valuation parameters come to the extreme, that's where then position sizing becomes extremely important. Now, as I mentioned to you, I mean, position sizing can be a little subjective for someone, but what y'all can do is that, say for example, I mean, this is one of the way I am telling you. Okay. So say for example, when the prices hit the minus 2 hd mark and it starts turning around. Okay. So that's where probably you might take 20-25% or so on break of 20 on the break of 20-day average. That's where you might take 20-25% or so. And then when your prices have moved above the 40-day exponential average, or then there is this trend line breakout or something, so that's where you might want to go all in. So basically, what I'm trying to say is that you set different uh, I mean, you can say that you are basically putting weightage to each of the parameter, which is that कि अगर valuation आया. So right now, what I am trying to do is that I am trying to put checks on four of the parameters. Okay, one is that the valuation. So say I give it 25%. Breaking above the 20-day average, that is 25%. Breaking above the trend line, that is say 25%, and closing above the 40-day exponential average, which is the this blue line. Okay. That becomes 25%. So that way, I can basically position size myself based on 25%, 25%, 25%, and 25%. Okay. So what happens is that when, say, the stock is falling, okay, and you are trying to preempt a turnaround, so it is only on that 25% where you will lose. Okay, because you are trying to preempt a bottom. And basically, say over here, if I would have gotten in, okay, when it was turning around. So say over here I invested 25% of the amount. Okay. Now when the 20-day average closed above it, over here also it is 25%. But one thing that we usually follow is that whatever stop losses or something that you are putting, that should be on a closing basis. So say for example, if this low has occurred, okay, so which was say 1301.65. Now ideally over here, in this candle, the closing should be below this. If it is below this, then yes, we accept that the SL is trigger, and then we end up waiting out for one more new signal. But if that doesn't happen, then the trade is still on. Okay. So in this case, what has happened is that till this point, okay, I mean, you can see over here that the low over here is say 1301.65. This closes 1303.55. So technically it has not closed below this level. Yes, intraday it has gone down. I mean, people will say कि इसमें मैं क्या करूं, but these all things that can happen, and that's where you have to take that judgment on that particular day how things are. But yeah, I mean, that is how it is. So what you do is that say in this case, you would have been invested 50%, and then after when the trend line broke on the upside, when the moving averages broke on the upside, so that's where now you are probably 100% invested over here. And when you do your average and so on, your average would say will somewhere come in between. Okay. So now, what, as I mentioned to you, what you have to do is that you always have to wait for the stock price to come. Now this is for those people I'm telling you, who follow technical plus fundamental approach. Okay. Because as I mentioned to you, typically the prices come from one extreme to the other extreme. Sometimes this can take few months, or sometimes it can be even in years. I mean, even in matter of few days that can happen. Okay. So that's where now the people who follow this approach, okay, for them, basically, what you have to watch out for is that when is that the price is coming from one extreme to the other extreme. So now say it is coming very close to the plus 2 hd mark. Okay. Say for example, there is some more bit of rally and it comes to the plus 2 hd mark. Okay. That's where then I will start be concerned, if at all that the correction can happen, and this from one extreme we had gone to the other extreme. So is there a chance that from this extreme it can again come down, right? So then what you try and do is that, as I mentioned to you, now entry was based on these factors. Okay, the exits can also be valuation, and let me not put Bollinger Band but trend line. Okay, so these are the same things that you will use it for entry as well as for exit. Okay, now as I mentioned to you, I mean, these are all subjective. Exit में कभी कभी ऐसा लगेगा कि that if the market is falling apart, then maybe you would want to exit everything at once as well. But the ideal way could be that you trim off slowly, which means that right now that you can see, I mean, when I draw the trend lines, so basically this proves to be an important trend line at this point of time, right? So it is when the valuations hit the plus 2 HD mark. Okay, maybe if I am a bit concerned, then I will see to exit. But sometimes what happens is that, and not sometime, but this happens many of the time, is that when the stock is in crazy momentum, so the prices can sustain above the plus 2 HD mark for quite some time. Okay, so in such cases, what you do is that you try to draw an parallel channel on the upside. So say for example the prices come over here, the price and the plus 2 HD mark is breached on the upside, and from there if it is turning around, so then maybe I might want to exit this 50% or so. Okay, and then trail it the rest with the moving averages. So that is something that I can do. And then my ultimate downside will basically be the 40-day exponential average, because the 40-day exponential average, if it breaks on the downside, then I don't know how deep the decline can be. So that is where I might want to back off. So you can see over here that over here as well, the 40-day was breached on the downside, but because we were not at the plus 2 HD mark, so maybe for people who are concerned with the valuations as well, okay, for them it was not much of a concern, because the valuation had not come to an extreme. But now when it comes to plus 2 HD mark and it breaches on the downside, then I will be a bit concerned, because the valuations have moved from one extreme to the other extreme, and that's where I will be a bit more concerned. Now I will tell you how else you can also confirm. Now you can see that Nifty IT, okay, this is a component of Nifty IT index, right? So Nifty IT index ka bhi, when you check the valuation, so over here, I mean, this is what we are taking it from NSE. So you might want to assess the valuation based on different time frames where it is. Okay, so you can see that in 1 year, okay, the extreme has not been hit. So where is it in the context of the overall valuation? So in 3 year it is somewhere reaching that point. In 5 years, okay, it is still not at 2 HD mark. In 10 years, okay, in 10 years also it is not still there, but yeah, it is around the upside. Then the max is, so when you do max, so this is it. So this is, we have it all the way from 2002. So over here, you can see that over here as well the valuation have sort of reached. And basically, what I'm trying to say is that when you go to the valuations, if your main benchmark index is also at an extreme, okay, then you will be very careful about it. Okay, so this you can get it if you purely want to see valuations on different parameters. Okay, then you can get it over here. So for this, basically, what you have to do is that you type Nifty IT over there. Okay, and you click on the valuation parameter and you will land to this page, right? So yeah, I mean, basically, when your benchmark index is also indicating that you are coming to that overvaluation zone, So that is a furthermore indication to be a little careful. I mean, that is just like a double check that that you're trying to do. So basically stock में तो देख लिया कि ओवर वैल्यूएशन के टुवर्ड्स आ रहा है, बट हाउ इज इट ऑन द इंडेक्स लेवल, कैन दिस up move sustain or no. So these are all things that you try and validate. So anyways, coming back to where we were. So say for example this was HCL Tech. Okay, and we have come out over here. So as you can see, basically over here the point is that when the prices come to plus 2 HD mark and then it corrects, that is the point of action for me. Okay, until then, maybe I would be a little more fearless that okay, valuations extreme pe nahi aaya hai, so this thing can continue. Okay, now now the same thing I will tell you from a slightly medium term perspective. Okay, so say for example, I mean, this, while I was making a short video back then, so this was Cummins India. Okay, and we all know how capital goods was roaring. Okay, so over here what had happened was that the prices came to an extreme over here. In fact, in COVID, as I mentioned to you, I mean, the prices had come to the minus 2 HD mark, but then steadily it had been rising higher. So see, over, I mean, this was the point when it had reached overvaluation zone, right? When it had crossed 2 HD mark. So now if I have to do the same thing, okay, now when I do the trend line, actually it has broken the trend line on the upside. Okay, so yeah, I mean, this is now basically, that means that it is in extreme momentum zone right now. Okay, I mean, around this point, and let me show you. So the prices over here was basically 3006 on a closing basis, and it went to almost 4171. So I mean, that is like almost a 25-30% kind of up move even from the overvaluation zone. Okay, so then what we come down to is the same thing that we need to follow. So basically, when the RMI got into the sell mode on the monthly chart, okay, so this is where my point of action should ideally be. Okay, if not anything, then at least I have to remove some part. Maybe the trend line break on the downside, I would have ended up selling some part. But what you can also do is that when you see that things are a bit way off, like for example this was around year 4000 where it had hit the upper Bollinger Band. Okay, and you can see that the distance is big. You can actually come down to the lower time frame. Okay, so lower time frame pe aake then you can start position sizing yourself, because the whole point is that I mean, the distance is very large in the monthly chart because everything happens on the month end. So when you think that it has reached I mean, it has reached extremely at the high point, so that's where you might want to fine tune it further by coming one time frame lower. Okay, so yes, I mean, that is where I think a multi time frame approach also works very well. That if monthly may it has come to the plus 2 HD mark and so on, so monthly may to turn around hone, it might take some time, right? Monthly may turn around hone. Now see, this had given to you the sell on 1st of October, right? But when I do weekly, and let me see when it had entered. So it is in March 2024 it had entered this overvaluation zone. Okay, so it was, so yeah, so you can see over here that when this time around, when this sell crossover happens, right, this is where I would be a little careful. And then as I mentioned to you, what I would want to do is that I want to plot those Bollinger Band and so on, right, to understand 40. Okay, so Bollinger Band and the trade setup that we usually follow, that is what I would want to see. And based on that I would want to I mean, I would want to, do all those entry and exits. So as you can see over here, okay, so यहाँ पे ये sell crossover आया, but the 20 week was not broken. Okay, so maybe, I would want to book out say 20-30% or so. And then when there is this break of 20 week, in fact it broke only over here. Okay, here there was an intra week break, but not on a closing basis. So somewhere over here is where, I would have booked the other position. And when the 40 week has broken on the downside, so it was actually over here. So then that's where, I might want to book out entirely, because now there is a risk that from one extreme, it can come down to the other extreme in the next probably a few months, or maybe in a year or two. So broadly what I'm trying to say is that, these are like all the opportunities that you can try and find out based on, the valuation parameter. Now I will give you an example, okay, a live example as to how do I think about it. Now say, I mean, QSR was a space, that was buzzing. Okay, if you see Jubilant Foodworks, and if you would have seen its weekly monthly chart, okay, so based on the PE, I mean, it was looking expensive, but if you see, I mean, if you plot those moving averages and so on, so over here, I think it was 1 year. Huh. So it was this 1 year to market cap to sales where it had come to this oversold zone. And in fact, even if I do 3 years, so, it was somewhere around this part, okay, where it was, sort of getting to an extreme. And when you see Jubilant Food ka long term chart, so yes, I mean, basically, I do some Elliott wave analysis as well, and basically what it was suggesting was that this was a WX, YXZ kind of formation. And basically this support level was holding out very well. So if I plot the 40 month average, okay, so it was somewhere over here. And maybe when we look at the chart setup as well, so on the monthly RMI, this was giving a bullish crossover right over here only. But when this came, when this part, or when this decline came, there was this valuations also which had come to an extreme on the downside, and there was a lot of pessimism that was there. And then there was this very good move that we had seen. I think, if I'm not wrong, we had also updated on the strike updates as well, when it was, somewhere around this part, that, this was basically more of a double bottom kind of breakout, and the valuations have also improved and so on. But this is what, if I see the same thing over here, now say something called as Barbecue Nation. Again, I mean, this is not a recommendation, but I'm just telling you the thought process, how to think about it. Okay, so you can see that in the 1 year mark, the market cap to sales, I mean, it has dropped to -2 SD mark. So now over here, what are the things that, one need to watch out for? Okay, so one is that, firstly, that the turnaround should happen and the prices should start improving. So basically, if something like this happens, okay, so over here will be the first entry point. The I mean, secondly, when there is a bullish crossover that happens, okay, that will be the second addition point. And then when I do these things, when basically there is this, okay, so now when the trend line breaks and the 20-day breaks on the upside, that's where, the addition can be even more. and when the 40 week is I mean 40 days broken on the upside, that's where it can be a very good probably a opportunity from a positional perspective, because as I mentioned to you, say this was just uh, in 14th on 14th of October, it had gone to from one extreme to the other extreme, and now from there it has come down to another extreme in just the matter of 2-3 months, right? So when you look at its 3 year, so now the only thing that you also have to understand is that because we calculate HD, okay, so this can sometimes come in negative as well if the average is a bit lower. So of course, a market cap to sales, it cannot become negative. So that is something that you need to understand, and you have to make sure कि ये of course -2 HD पे तो नहीं आ पाएगा, because this is into minus. So at such point of time, what you basically know is that when it has come to an extreme, and when fundamentals, I mean not fundamentals, but when when it comes to some support line, so say, I mean, this support line, if you see, is very deep. So I'm not sure if it is gonna hit that mark, but the next support line which I will watch out for is basically this. Okay. Sorry. Okay. So now you can see that it has come to an important support level over here. Now what we have to see though is that whether the turnaround happens or no. Okay. So if the turnaround happens, then on the lower time frame, which is the daily chart, if you're getting this bullish crossover, the valuations are improving. So that can possibly be a good point to see if the reversal can happen or no. And then what I mentioned to you was that position sizing, focus on that कि ये trend line breakout होता है, 20-day average break होता है on the upside, then it can be a good point. Okay. Now I was telling to you earlier that there are some cases when the prices hit the 2 HD mark on the upside, okay, but the rally still continues, and that is because, no, wait, you will see it over here. So over here, you can see that based on PE, for example. Okay, so 2021 may, because that COVID thing happened and so on, so prices were depressed. Because the profitability was not there much. So in such cases, you can also move to some other parameter like market cap to sales, say for example. So market cap to sales, you can see had come to this +2 HD mark only over here, right? Only over here. So when you see that this has come to the +2 HD mark, then again those all parameters will kick in, basically those setups. Okay, ये यहाँ पे आया, and then when there is a turnaround and the RMI is giving sell, so maybe I might want to exit, say 25-30% or so. Okay. Now, but you can see that the other parameters are not getting breached so far. I mean, the 20 days holding, the 40 week is holding. Okay. So in such cases, you have to wait for that, because what happens is that, say for example, if the earnings keep continue to grow, so ऐसा हो सकता है कि it might come and test the 40-day exponential 40-week exponential average, and then again it will go higher, and the valuation will come like that, and it will again rise higher, right? So I mean, so such things can happen. So that's why if you are a medium to long term investor, okay, following this setup, following this simple setup will help you to time your entry and exits. Because what happens is that it is, I mean, it is very underrated, but you also need to sometimes sell your long term holdings, because it can take a long time to recover back the money. For example, I mean, say if you would have been an infy investor, okay, so now let me just remove these things. Okay, and you see over here, I mean, this was a crazy move that had happened in 2000. That high got captured only in 2006. Okay, that too, I mean, you would have made money only after this part, because this entire was a phase of consolidation only. So it was basically 12 years. You might have only just got dividends, but nothing in terms of absolute return. I mean, this you can pick it for any stock. I mean, this was Ketan Parekh ke wajah se, or basically, all the cap good stocks and everything, they have rallied a lot. Sorry, Ketan Parekh wala was Z ka to, you still wouldn't have got any price only. Iska BSC chart, okay, the trading view doesn't have, but wait, let me. So basically what I'm trying to say is that once in a while, that sector gets into that bubble zone. Okay, and once it gets into the bubble zone, so it is then very difficult for those stocks to recapture those previous high. Say for example, I mean something like Z. Okay, this is, I am doing the monthly chart. So you can see that this was a phenomenal move that it had seen, and that was due to all those Ketan Parekh also pumping the stock and so on. But if you see the next 20-30 years, it has done nothing. Okay, 20-25 years, it has done nothing. In fact, now something similar is going on in Asian Paint as well. I mean, if you, so again guys, I'm just clarifying it once again, but these are not something that you take it as a recommendation and go and take some action based on what we speak. This is just, I'm trying to show you the example. Now, like, you can see over here, Asian Paint never used to break this 20-month moving average since a very, very long time. I mean, this has got plotted since 2003. Okay, it was only the last month, I mean last quarter, when it broke. So sorry, this is actually a quarterly chart. Okay, and you can see that it broke and it fell down. Okay, so if you see this in terms of monthly chart, the in 2008 the 40 month was broken, but after that you can see that it has been rising higher, and 40 month always used to get saved. Okay, it is only now when the 40 month is broken and it has gone down. I don't know. I mean, when I see such kind of chart, I feel a little scared about this. I think something very similar had happened to ITC as well. So ITC, if I do the quarterly chart, wait, let me hide the drawings. So yeah, over here, let me remove the band and you will notice. So you can see that the 40 quarter average never, in fact, if you do the 20-month average, okay, 20-month average never used to get breached on the downside. So since 2003, okay, the 21 month was holding, and then when it broke on the downside, so your 240 wala became 120, 130. So that was still a big cut that had happened. So the point I'm trying to make is that every stock, when it sees a massive bull run, okay, at some point of time, it is going to get into that medium to long term consolidation phase. So that's where taking this approach of strike valuation setup, and combining your momentum and I mean combining RMI and valuation can help you stay away from those big sort of what we can say consolidation phase. And this, as I mentioned to you, I mean, over and over again, you will end up seeing these moves. I mean, something like this had happened in IndusInd Bank, if I remember correctly. So if I have to remove the bands, and you can see that the 40 quarter, or in fact even on the monthly chart. So you can see that in the monthly chart after 2009, okay, this was not breaking, but once it broke on the downside, so it was somewhere over here. I mean, that's when you had seen this very big correction or consolidation. So always, when such long averages which does not break for quite some time, when they break on the downside, I mean, you need to be careful on such kind of stocks, especially when they have been in a bull run, and they have been the poster boys of that bull run, because that's where a meaningful consolidation or correction can happen, which can last for a few months to few years as well. Okay. So yeah, I mean, basically, those were the things that I wanted to convey. And uh, and as I mentioned to you, I mean, so the strike valuation works for everyone. I mean, be it a short term investor, medium term, or long term. The time horizons that you need to follow is probably these that I have mentioned over here. For short term, it is 1 year. For medium term, it is 3 to 5 years. For long term, it is 10 years to max. Okay. And as I mentioned to you, okay, even say for example, in 3 or 5 years, if the valuations have reached an extreme, okay, and you see that the reversal points are way apart. I mean, say for example, say if this was a 3 year chart, for example, okay, and see, we would have been over here, and if the stop loss is or the reversal points are very big, then you just come one time frame lower, okay, and fine tune, and you fine tune your entry and exits even better. Okay. Basically, what it helps you to do is that कि जो 20-25% डाउन पे जो ट्रिगर होता, that trigger might happen just if it reaches 10 or 15% only. Okay, so that way you will be able to save that 10% even better. But as I mentioned, I mean, there are few people who might not be concerned with that 15-20% correction, because they feel that long term mein chalte hi jayega. So I mean, there is nothing to offer to them, because that's a style that they have. But people who want to optimize their profit, I mean entry and exits, and maximize their returns in such cases, it's extremely helpful, because as I mentioned to you, the valuation comes to an extreme only when these, now say for example, Titan also, it has been in this secular move. And if you see Titan's chart on some of the time frames, like you can see over here, this is the 40-month average. Okay, now you can see that each time it has come to the 40-month average, it has bounced back. So it is when, now that this has been a poster boy since forever, I think now, especially after 2009. So when the valuation reaches an extreme, which it has already done over here in 2020, okay, 2022. So now whenever it breaks this 40-week average on the downside, then I'll be extremely worried, because what can happen is that the stock can get into this consolidation phase, which can probably last for many weeks or probably some years as well. Okay, and it can give you years of negative return or zero return. So in such cases, actively managing your portfolio can help you to stay away from those underperformance and so on. Okay, and that's where I think your strike valuation setup will come into play. And I mean, with that, I end my presentation. So I know that many of the people will now ask that when will we get that valuation scanner. So as we had mentioned to you earlier as well, okay, as we had mentioned to you earlier, that right now we are optimizing our system and bringing all the modules to 1 minute delayed. Okay, once we do that, we are hoping that this all things happen in next few weeks. Once that happens, we will definitely bring those scanners. So once again, thanks a lot for being patient with us. But there were some challenges that we had faced earlier, and we recognize that the system has got a bit slow, and that is what we are working on. Okay, once we do that, and once you see all the modules, because right now if you see only the futures wala jo section hai, that has come to 1 minute delayed snapshot. Okay, so this we will be in due course. In due course, we will be doing it in all the modules. Okay, options, dashboards, scanners, sentiment indicators, and so on. And once you do that, okay, once we do that, that's where we'll start rolling out new features, because what we don't want is that, okay, we be in a hurry and we roll out features, and then we are not able to address it. Okay, because that will lead to a very bad experience, and that is what we don't want. So just be patient with us for couple of months. And as I had mentioned in my last webinar as well, that you will have the best of the experience, and the speed and all won't be an issue anymore. Okay, so just bear with us for a few weeks, and we will get and we'll make it a very robust system, which will be helpful for everyone. Be it fundamental analyst, fundamental traders, investors, traders, FNO, everything. Okay, so that's it. Now if there are any questions, then we can take it. Can I? So, okay, wait. Om Prakash was telling that can I take a snapshot of your notes? So let me do one thing. I will just put it in the chat so that everyone can take a note of it. Okay. The next question is from Ash. Can you take this same example for PI Industries? Question over here is that PI Industries valuation is all minus 2 HD for 1 3 5 years, and also the trend lines are broken. Isn't that catching a falling knife? Okay, wait 1 minute, let me check. So PI Industries. So yes, first thing that is very much notably visible is that it has been holding about the 40-month average for a very long time, and you can see right now it is in sell mode. So yes, Ash, thanks you asked this question, because this was also very important to clarify, and I actually missed it. But see, what happens is that many of the times the stocks which you feel has a lot of value, okay, they may tend to be in a value zone for a very long time. Okay, so what happens is that, say for example, if you see ITC over here, I remember when I was an analyst at I think Sher Khan, or one of the wealth management firm. At that point of time, I knew everyone who were telling ITC is a value buy. Okay, eventually what happened was that there was this triangle breakdown, and what I had mentioned to you. Okay, so basically ITC at that point of time was either breaking so this was this 40-month average. Okay, ये 40-month average को it was breaking on the downside with a triangular pattern. Now I have seen this n number of time, that if people are very bullish on some stock, okay, they feel that the valuation is cheap, etc., etc., and if such breakdown occurs, it typically ends very badly. Okay, those all investors are disappointed, and despite those cheap valuation, it will keep falling. Okay, there was one such example which I clearly remember, and I thought that I wish I had this strike valuation set up long back. So there was this stock Tata Motors. Okay, I think it was falling from 600 over here. Okay, and I knew that everyone on the street was sort of bullish over here, around 200 levels or so. Okay, in fact, when it had reached this 2016 mark, okay, at that point of time only they were telling, "Arey, it's a value buy now," and so on. Okay, and after that, what happened was that the stock crashed from 260 to 64 levels. So the point over here, what I'm trying to tell is that look for those setups, because if you would have seen the 20-month average was never broken, on the downside, right? So even if you are taking those bets, based on valuations or so, you wouldn't have betted a hell lot of money. That is because those criterias are only not matched, which is of it moving above the 20-month or the 40-month. Now I think when I look at PI Industries, the same thing seems to be happening over here, because when I see this, okay, it has broken the 20 week. Now there is a possibility that it can come to 40 week, it can complete this cycle. But now when I see the weekly chart, it will obviously be trading below these two averages, right? So now when the turnaround happens, okay, so let me see PI Industries. So yes, you are right over here. When this turnaround happens, okay, you will probably follow the method that I mentioned. But what what you have to understand is that there is this other setup as well that you have to keep in mind, which is 20-day and 40-day, and your trend line not breaking on the upside. So as long as this setup is not fulfilled, okay, you might not be going 100% all in. Okay, you might want to bet and trade on that tactical. So I think, if I purely see the price action, so over here, somewhere over here, I mean, that's where a major support is based on the price action. Okay, so yahan se when it turns around, and like you mentioned, it has come to the minus 2 hd mark. So yes, the first criteria is fulfilled. Okay, so now when it turns around and it makes a first higher high, maybe that's where you would want to take some bet. Okay, and then your 20-day breaks and 40-day breaks, then that's where you would expect that from one extreme it might eventually go to the other extreme. But until that doesn't happen, you need to be careful. And one more thing, when you need to be careful, is that if at all, on the monthly chart, the 40-month breaks on the downside and it goes down, then you have to be extremely careful, because I know, I mean, PI Industries has been a wealth creator. And if I see its BSC chart, I mean, it has been on the rise since a very, very long time. And I know, I mean, people, even when I was in that wealth management firm, people used to be extremely bullish on that. But you have to understand that, after company achieves some sort of scale and, some sort of size, it is not easy for them to grow at the pace at which they used to grow earlier, right? So that's where this can slow down. And as I mentioned to you, if the 40-month breaks on the downside, then you need to be a little careful, because there is a chance that the stock, which had almost seen, like, I think, three, I mean, this is like a 30x return. Okay, so such stocks can then get into a big phase of correction or consolidation till the valuation doesn't match uh, their growth rates. So you need to be careful on such fronts, Ash. I hope that answers your question. uh, Abhijit Ghosh, can we call valuation as euphoria or wave 5 from an elite wave perspective? So Abhijit, yeah, I mean, so I will put it the other way, that if there is wave 5 that has unfolded, okay, and your valuations are on extreme, then you have to be even more careful. Then the next question is from Shekhar. Can ICICI Bank at 1200 levels? Because so Shekhar, I don't want to get into the stock specific, because over here, what we are trying to discuss is valuation and trade setup, how you can combine that. Okay, Krishnan, I'm facing imminent breaks in voice and low quality image. I don't know. So I think it might be from your end because of the internet, but I don't think there is any issue at my end. So There is one more question from Ash. So in case of PI industry, it's on other extreme, right? I have already addressed this. Please give a view on IGL. I think IGL had an IGL had an interesting setup. That is because it has gone into a range for a very long time now. Okay, when you see this, it has become range bound for quite some time now. Okay, and you're right that the valuation had also come to this extreme. Okay, so over here, honestly, this can be a good setup, but what needs to be seen is that the stock breaking above and sustaining above this weekly averages. Okay, else what will happen is that, in my experience, that there will be some sort of consolidation that may happen. Okay, which will help to sell the which will help to subside the selling pressure that we had seen over here. And then maybe around that point, the valuation say hover over here, and then it sees a next leg of up move. Because when you see IGL, its medium to long term setup looks good, because I think when I was checking the quarterly chart, and in quarterly chart it is at the 40 quarter average, and basically this sideways range has developed for the last few months, or in fact few years, I would say. So yes, I mean, when the valuations have come to this extreme, so then watch out for whether they are sustaining above the averages or no. Once it does, I think the mojo will come back into these stocks. And yeah, I mean, that's where the valuations now, if you see, are very much favorable. So once we get the technical setup also favorable, which is above the averages, and even the monthly, which would have been in sell right now, I believe. Yeah, so even when once that comes into bullish mode, and you have the valuations also on your side, so that's where it will work very well. And I think it might not just work well for 6 months, 1 year, but it can work very well from a medium term perspective as well. I mean, by medium term, I would mean that 3 year, 5 year as well. It will work very well from that perspective. Tata LXE. So, anyways, I mean, I don't want to get into those stocks, but if you'll have any specific, if you'll have any specific observations, then I can help you. But not, I mean, if you ask me directly कि ये stock ऐसा है, then what to do, then sorry, I can't comment on that. So Deepak says, which filter to use for stocks having minus 2 HD. So right now, Deepak, whatever stocks that you have, I mean, right now you will have to check it manually. But check it manually in the sense that, if you are looking at some stocks, uh, if you would have seen, say for example, JSW Energy, that has been falling since a very long time, then you just randomly go and check what the valuations are. Okay, that is what in fact, even I do. So when a stock has fallen a lot, then I check for the valuation parameters, how is it on different time frames. Okay, and how is it on different parameters as well. Like you see, price to book value, it has collapsed, but in the medium to long term, I mean, the valuations were extremely high, and those are cooling off. Okay, so here there is a difference. Maybe in 1 year, whatever you see this undervaluation, you will get a tactical pullback. But if you see the medium to long term, it is still very high. So yeah, so in such cases, what I would expect is that in JSW Energy, for example. Okay, now we have seen that the 40 week has broken on the downside, and this is not a good setup to have. And you will see that this is in sell mode. Monthly is now getting in sell. So I will be careful, because once you see that the higher time frames are on sell, okay, then you would want to wait for a turnaround to happen. So it is not that कि just blindly oversold में आ गया तो ले लो, but you would need some analysis on different time frame as well. Okay, and I would recommend that always follow 2 time frames at least. Okay, if you are watching for a if you're watching it from 6 months to 1 year perspective, देन चेक डेली एंड वीकली चार्ट. ओके, वो दोनों में जब बाय रहेगा देन यू विल हैव दैट कन्विक्शन. बट यू नो, in cases like JSW Energy, as I showed you, I mean the valuations were very extreme on the upside. In fact, if I had to plot 3 HD, maybe it would have even touched 3 HD mark. So from there correcting, there is a risk now that it can correct even more, in the medium to long term. So in such cases, only tactically I will trade for a bounce or an up move. Okay, but not for a very long term, because looking at those valuation parameters, it feels like it might have seen that very big up move. Okay, so until the technical doesn't get favorable, you need to wait out for that. uh, Maddie, as I mentioned to you, is there a valuation scanner? Yes, we have made it, but we have not gone live so far because, as I mentioned to you, we are right now, looking to get all the screens to 1 minute delayed. Once we do that, we'll definitely roll this feature out, and it will be extremely helpful for you all to find the stocks which are undervalued or overvalued for that matter. Where do Please do come with 1 minute delayed. Yes, Mohammed Ashfaq, we are already doing that. And in few weeks' time, I can assure you that we will come down to my 1 minute delayed. Uh, Deepak, can you check Axis Bank is minus 2 HD and Dixon is still upward? How to evaluate these two stocks? So, yes, I know that Dixon. So now if you see Dixon ka thing, so one thing is that even once you see their quarter annual numbers, okay, so over here in Strike, when you do annual PNL, okay, and you do growth percentage, you see everything in growth percentage, and you can still see that the growth is getting stronger and stronger for Dixon, right? I mean, that is why it is actually able to sustain even at higher valuations. So say if I go to the Strike valuation chart, and I don't think even the monthly would have come in sell. So if I do its 10-year chart, and you see that it had come to this extreme. Now, so far it is still not towards that second extreme, but and also you see that the momentum is in bullish mode. Okay, so it is when the bullish momentum fades away and it gives a crossover, that is your first alarm bell, right? Even if I do max, and then you have to plot all those things which I mentioned to you. So over here also, when you see, if I remove the band, and you see that from 40 month it has again taken off, right? So when it comes to this plus 2 HD mark on the upside, okay, and then on the lower time frame when it starts breaking the averages, so even I think on the weekly time frame it might be so on the weekly time frame, it might be trading above the averages. Yes. So you can see over here that how nicely the averages are acting as support. So once the 20-week breaks on the downside, this will be my first warning sign. Okay, is this due for a correction? And if the 40-week breaks, so 40-week is nothing but your 200 moving average, because 40 weeks into 5 days is nothing but 200 a day moving average, right? So once the 40-week breaks on the downside, that's where you will put your hands up, and you don't know how deep the correction can be, right? So that is what typically that we follow. And when you have these sell signals and your overvaluation is also there, because I think in terms of PE, yes, I mean 160, 180, 130 PE, in such cases when the sell signal occurs, you need to be a little careful. Okay, so over here also see the sell signal occurred, but it was above the 20-week average. But now when the 20-week average breaks on the downside, then you have to be careful, because then there is a risk that can this get derated and can this lead to a bigger correction. And you said that Axis Bank. So Axis Bank in the short term, yes, you are right. that it has gone to minus 2 HD mark. So over here again, I mean, you would follow the same process, right? Is it breaking above the trend line? So now say the trend line would have shifted because there was this smaller high that it made. So now you would keep this as your first watching point. So say for example, yahan se if the valuation starts improving, okay, there is a bullish crossover on RMI, so then that will be your first point. Then breakout above the trend line, then you wait for the averages to be taken out on the upside, and that's when you will be sort of 100% invested. uh, and then your the expectation would be that ke ye one extreme se दूसरा extreme आएगा, but so far I mean when you look at the chart it is weak. So so maybe just on the valuation parameter, if the rebound happens, okay, then you might just want to take that nominal bet of say 20% of your entire amount what you would like to invest, and then wait for the other parameters. Because see, right now, honestly, in this crossover, okay, there was this undervaluation that had happened, so technically my stop is out. I mean, this low has been broken, so that means now I shouldn't be preempting till the time I doesn't get a till the time I don't get a new bullish crossover. Okay, and then as I mentioned to you, I mean, follow those parameters, ke trend line breakout and averages breakout. So that's where, I mean, it will then help you. Because see, in such cases now, when we are trying to find bottom, हमारा एक दो बार stop loss होगा, but then when it comes in our favor, it will more than compensate for whatever 2-3 times you tried. The only problem that happens is that psychologically, are you able to do that or no? Because एक बार मेरा stop loss हुआ, second time I got stopped out, third time I would get very nervous. Okay, so it is then believing that this thing occurs over and over again, that faith you need to keep. Because that's when the turnaround happens, I mean, you will be able to make up for those 2 or 3 stop losses that were hit. And also, mind you, those stop losses, those get hit, that will be on 25%. Okay, and when this up move actually plays out, so at that time you will be earning on that 100%. So that is the difference. I mean, that's where position sizing becomes key. So when something is in a downtrend and heavy downtrend, you don't uh, you don't bet your house on that. You wait for a turnaround, and once you see that the uptrend starts happening and you see those patterns occurring, that's where you have to start betting a bit more than what you were betting earlier. So that's where it will make a difference to your PNL. Shekhar, can you do a webinar on Bollinger Band? And so, Shekhar, we have already done it. I mean, you can go to the Strike Money platform on YouTube and you will be able to see over there. I mean, we have done enough webinars over there. In fact, Bollinger Band strategy is also something that we have put out on our Strike Money. So, those are all those small videos that we have put out, and you will be able to see. Okay. Short long averages. So please show that day's high and low in swing. Sorry, I don't understand by that day low. Om Prakash, Samir Nayak. So my takeaway is always minus 2 HD or plus 2 HD. Is it correct? Yes. So your actionable points, Samir, are when the valuation hit the plus 2 HD or the minus 2 HD mark. That's where you will start actively looking at what decisions that you need to take. PEL, Cummins India still in short positions. Can we buy put? I'm not answering that. Please show equal to arrange. Sorry, Narasimha Murthy, I am not able to get your question. MNM, so please suggest 20. So Rakesh Kumar, your question is, should we take, please suggest 20 or, yeah. So see, as I told you, I mean, the pattern that we follow is the same, which is 20 period average, 40 period. If you are looking for shorter time frame, use daily chart. Okay, if you are looking for a medium term time frame, use, so let me put it this way. Okay, daily chart. For a medium term investor or positional traders, use weekly chart, and for a long term guys, use monthly chart. So as I mentioned to you that if monthly may the reversal points are too big, okay, then come down to one time frame lower, that is on the weekly chart, and try to fine tune your exits, because you cannot wait for a 30% decline if you know that the valuations have come to an extreme. And also especially what I try and do, I mean, this is more of a sentiment analysis, you can say. Okay, when people are talking about that particular stock in the media, then I be even more careful, especially when they hit the plus 2 HD mark. So that is also something that you can follow. uh, Abhishek, very informative. Can you share the cover or the Excel filters? So, Abhishek, as I mentioned to you, I mean, we will bring this scanner also in due course, but bear with us for a few weeks, until we get our system time down to minus one. I mean, until we get our system timing down to 1 minute delayed. Okay. So Dhyaneshwar, yes, will come down to 1 minute soon. As I told you, I mean, it is a matter of few weeks. We have already done the dashboard. We are in a testing mode. We will deploy it in few days time, and then we'll work on other modules as well. How to find multi-bagger stocks? So, Anand, that is what we mentioned over here. The recipe for finding a good multi-bagger stock, or stock which can give you good exponential return is, watch out for the stocks which are at minus 2 HD mark. Wait for the momentum to turn around. Okay. I mean, so assuming that, and look, if you want to find stocks from a medium to long term perspective, find such setups on on max chart, because max chart is when your long term valuations are getting undervalued. Okay, so it is either 5 year chart or 5, 10 or max year. So 5, 10 or max year may, when you get such sort of setups where the valuations are in dumps, and the momentum is turning around, and then the averages break on the upside, that's where there is a good chance that there was extreme pessimism in that stock, and things can turn around. So yes, I mean, that is the recipe for such stocks. Dhaneshwar, can we get delta, theta, gamma options? Yes, delta, theta, gamma, these are all there over here in options. You go to option chain, and you will get it over here. In fact, in manage screens, I have removed it, but you click over here, and you will get all those values over here. Okay. So yes, I think with that, I've addressed all the questions. Hopefully, I mean, this was useful for you. And I honestly thought to do this webinar specifically because many of the stocks are actually in small mid cap sections, which the retail people usually like to trade and invest. So I thought that maybe such, I mean, finding such entry and exits will be important, because many of the people who must have been holding multi-bagger stocks for a long long time. I mean, the we get biased ke हाँ ठीक है ये थोड़ा तो correct हो गया, it will again start rising higher. So the whole idea was to let you know about the setups. Okay, once you see such setups, I mean, you do it over and over again, because right now, so yes, wait, let me share my screen, and let me tell you why we did this. So last week we spoke about the sentiment indicators. People who missed it, I would recommend you to go to our YouTube channel, okay, which is Strike Money, and over there, okay, so in Strike Money we had done a webinar last week only. So if you go to see the videos, I think, yeah, I mean, once this live session ends, yeah, you can see over here tops and bottoms. So we had done the sentiment indicators last week only, and we had mentioned why those sentiment indicators are pointing out towards correction. We did that. And apart from that, if you see the valuations of, say, many of the indices, like, mid cap index ka price to book has even gone above the high of 2008. And we all know what had happened in 2008. So will it happen the same this time? I don't know. But we are at that point that we need to manage our risk, because things are not so great. And also, I mean, this was something I had highlighted last week also, but I'm just highlighting it once again, because people understand what is happening in the market. So far, I don't think people are that serious to understand that we are at some sort of extreme. So see, so there is this indicator which is future OI by index. Okay, so future OI by index mein what? So what this indicator technically helps us to understand is the kind of leverage that is there in the system. Okay, so when this line gets crossed, or when we touch this line, so it sort of tells us that we are reaching an extreme. Because you can see that this is Jan 2018. If you see the Nifty mid cap index, this is Jan 2018. Okay, and we fell almost 30-40% from there. Dheere 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 karke we eventually fell that much. And that is because the leverage was very high. Now this, you can see this 1700 reading. Okay, so this is, you can say, a sort of ratio between future OI and index. So when this ratio reaches 1700, you have to be very careful. I mean, this is something that same had happened in 2008 as well. Okay, so we are sort of underestimating where we are right now, because right now what is happening is that 1700 ko break karke this future OI by index is sustaining. But it is also telling me that the leverage is very high in the system. And when the leverage is very high in the system, it typically doesn't end well, because the markets fall, there will be margin call that will happen, the stocks will get sold at market levels to recover those money, and so on. I mean, the whole idea is, I mean, it is not to scare you, but to tell you that we are not in a फेज दैट जो हमने 2020 के बाद से देखा है, वेयर every minor corrections were being bought. We are seriously coming to a point where we need to do a lot of risk management. And that is where I thought that this webinar would be helpful for you all in understanding and managing your risk. And someone had asked about I think the charges. So the monthly charges, so once you go to web.strike.money, once you make an account, at the top you have plans and billings. Okay, so we have made it very retail friendly. So all these prices are actually including GST. Okay, so the 1 month is 650, and we are running offers on 1 year, 2 year, and 5 year. So yeah, I think with that I'll conclude today's webinar. I hope it was useful, and I hope to see you all, probably in the coming Sundays when we keep the webinar. So thanks a lot. Until next time, and take care, and hope you do well.